That moment you open your mailbox and see an envelope from the IRS is never pleasant. But when you open it, and it says you owe thousands of dollars that you do know, that's a whole different level of stress. Your heart starts racing, and your first instinct might be to just ignore it, hoping it will go away. Or maybe your instinct is to panic and just pay it to make the problem disappear. I need you to hear this clearly. You should do neither. The IRS is not infallible. They make mistakes all the time. They might have incorrect information, they might have misapplied a payment, or they might be missing a form you sent. The system is designed to allow you to dispute a bill you believe is wrong. But you have to do it correctly, and you have to do it within a very specific time frame. This guide is your action plan. We will walk through, step by step, exactly how to read that notice, gather your evidence, formulate your response, and navigate the dispute process to get an incorrect tax bill corrected, all while staying calm and in control. The absolute first and most critical step is to not panic and to read the notice carefully. This sounds simple, but in a state of anxiety, people often miss the most important details. Look at the top of the notice. What is the notice number? It will be something like CP200, CP3-19A, or letter 525. This code tells you exactly what the issue is and what the IRS is proposing. A CP200 notice, for example, is a proposed adjustment because the income you reported on your return doesn't match the income reported to the IRS by employers or banks. A CP3-19A is a notice of deficiency, which is a much more serious letter that gives you a final 90-day window to dispute the amount in tax court before the assessment is finalized. The notice will also clearly state the deadline for your response. This is not a suggestion, it is a hard deadline. Circle it on your calendar. If you miss it, you lose your right to dispute the bill easily and will have to pay first and then fight to get your money back, which is a much harder path. Once you understand what the notice is claiming, your next job is to become a detective. You need to figure out why the IRS thinks you owe this money. The notice should provide an explanation. The most common reasons are unreported income, where the IRS has a 1099 or a W-2 that you didn't include on your return, or a discrepancy in claimed deductions or credits, like the earned income tax credit or education credits. Your mission is to gather all your documents to prove your case. This means pulling out your copy of the tax return for the year in question, all your W-2 self, 1099s, and any receipts or canceled checks that support your position. If the issue is unreported income but you believe that income is not taxable, perhaps it was a rollover of a retirement account that was incorrectly reported as a distribution, you need the statement from your financial institution showing the rollover details. You are building a bulletproof case, and documentation is your ammunition. Now, it's time to craft your response. This is not the time for an emotional plea. This is a formal, factual, and professional business communication. You should always respond in writing and send it via certified mail with a return receipt requested. This creates a legal record that you responded on time. Your response letter should be clear and concise. Start by stating the notice number and the tax year in question. Then, state clearly that you are disputing the proposed changes. Now, explain why you are disputing it. For example, you might write, the CP200 notice proposes to increase my income based on a 1099 from ABC Bank. I have enclosed my bank statement showing that this interest was earned on a municipal bond, which is tax-exempt under IRS Code Section 103. Or, the notice disallows my student loan interest deduction. I have enclosed my Form 109AE from the loan servicer and have highlighted my adjusted gross income, which is below the phase-out threshold for this deduction. Be specific, refer to the documents you are including, and always include copies of your supporting documentation. Never send originals, as they may get lost. What happens after you send your response? Ideally, the IRS reviews your documentation, agrees with you, and closes the case. You'll get a letter stating the adjustment has been reversed. However, sometimes the IRS may not agree, or they may not even respond. This is when you need to know about the next level of appeal. If you receive a notice of deficiency, or if the IRS rejects your initial dispute, you have the right to take your case to the IRS Independent Office of Appeals. This is a separate, more informal group within the IRS whose job is to be a neutral referee between you and the collection branch. Filing a request for an appeal often stops collection activity while your case is being reviewed. This is a crucial pro tip if you are facing a deadline and feel you are not getting anywhere. Formally requesting an appeal can be your best strategic move, in some cases. Even if you believe the tax is incorrect, there might be other factors at play. For instance, if the dispute is taking a long time to resolve and you are facing financial hardship, you might request your account be placed in currently not collectible status, which temporarily pauses collection efforts. If the dispute involves a joint return from a former spouse, you might explore innocent spouse relief. If the bill is correct but you simply cannot pay it, you can request a payment plan or an offer in compromise, but these are for valid debts, not for debts you are disputing. The key is to keep all communication lines open and to respond to every notice promptly. A common and catastrophic mistake is to stick your head in the sand. Ignoring the IRS does not make them go away, it makes them escalate, leading to wage garnishments, bank levies, and federal tax liens. A critical disclaimer: I am providing this information for educational purposes to guide you through a dispute process. I am not a tax attorney, enrolled agent, or CPA. The tax code is incredibly complex, and if the amount in question is large, the notice is a formal notice of deficiency or you simply do not feel confident navigating this on your own. It is a very wise investment to hire a qualified tax professional such as an enrolled agent or a tax attorney. They have the expertise and authority to represent you before the IRS, which can significantly strengthen your position and reduce your stress. In conclusion, receiving an incorrect IRS bill is a problem with a solution. It's a process that rewards organization, patience, and a firm understanding of your rights as a taxpayer. You have the right to challenge the IRS, and you have the right to be heard. By carefully reading the notice, gathering your evidence, responding professionally and on time, and escalating to appeals if necessary, you can level the playing field. Do not be intimidated. Treat it like a bureaucratic error that needs correction, because that's often exactly what it is. Take a deep breath, get your documents in order, and fight for what is correct. If this guide helped you understand how to stand your ground with the IRS, please support the channel by liking this video and subscribing for more content that helps you protect your financial well-being.